Hi, guys. So today we are covering Chapter 16, which is auditing the financing and investing process. We'll be talking about cash and investments today. So as you can see, our overview is first to talk about auditing cash. That's actually what the bulk of this chapter is talking about. And then at the very end, we'll spend a little bit of time talking about auditing investments. Okay, our first few minutes of this chapter, we're actually going to spend a little bit of time talking about an example fraud. This was the Satyam fraud, which was coined India's Enron. So I'm going to take a couple of minutes and share some really short YouTube clips with you. If you want to watch the entire videos, they're here. Okay, so this first clip just briefly introduces the fraud. Here we go.
Today, Satyam chairman Ramalinga Raju has left that reputation in a shambles, quitting the company with this letter, in which he has admitted to fudging Satyam accounts for years. He inflated the balance sheet to show 5,040 crore rupees, which never existed, and falsified the company's financial position and performance. Raju has said that he is now ready to face the law. Angry shareholders will want to see him suffer. Andhra Pradesh has already ordered an investigation.
Okay, so that's the guy. We see that he's been inflating balance sheet balances like cash. He kind of dropped a bomb on everybody because nobody had any idea this was happening. And then all of a sudden he published this letter, which just completely revealed everything. And one other little video clip I want to share with you is this one. The really funny thing about this clip is you see this newscaster reading out this letter live on CNN, and you can see Satyam's stock price slowly falling. It's just crashing. So we're just going to spend a few seconds watching that.
Just take the liberty of reading out page 1 of what I just read to you, because you may have been too shocked to absorb what Ramalinga Raju has confessed in this one page. So I start quoting once again the important balance sheet disclosures which Ramalinga Raju made. He says, and I quote again, "The balance sheet carries as of September 30th, 2008, inflated cash and bank balances of 5,000 crores and accrued interest of 376 crores, which is non-existent, an understated liability of 1,200 crores on account of funds arranged by me, Ramalinga Raju, an overstated debtors position of 490 crores as against 2,650 crores reflected in the books." I go on to quote from him, "For the September quarter, we reported a revenue of 2,600 crores and an operating margin of 649 crores as against actual revenues of 2,112 crores and an actual operating margin of 61 crores compared to 649 crores which was reported."
You guys get the idea. I won't have the whole clip play, but clearly he kind of dropped this bomb of a letter on the world. Everybody was stunned. Basically, their financial reports were extremely fraudulent, massively falsified. And a big part of that was their cash balance was extremely overstated. So what I wanted to start today with was talking about how they managed to do that. Satyam was audited by PwC India, so India's PwC affiliate, and basically there were a few pretty simple and basic things they did wrong when they were going through their audit procedures for cash. So I wanted to quickly talk through those. Satyam was a cross-listed firm, meaning they're listed not only in India, but they're also listed in the US. So the SEC and PCAOB performed investigations after the fact and published their findings. So that's where this stuff is coming from. It's coming from the PCAOB report after the fact. So basically, it talks about how they used, PwC India used flawed audit procedures in their audit of cash. And specifically, what they did wrong is described in this paragraph. So when they were confirming the company Satyam's cash balances, they failed to make direct contact with the banks that they were confirming cash with. So I'm sure you remember haven't really talked about cash confirmations so much yet. We have talked about accounts receivable confirmations, and we've talked in general about other types of confirmations, and we've talked about the importance of having a direct line of communication between the auditor and the third party that you are confirming the information with. So basically, the client should not be involved in the line of communication. So auditors should send confirmation directly to third party, and third party should send the confirmation straight back to auditor, right? Because when we were talking about AR confirmations, we talked about this process of I'm going out off site, so I can't be sending those letters from the client site. I have to go elsewhere to send out all those letters. And then I'm including an envelope in my confirmation package so they can send it straight back to me. And the point of all that is, of course, if I rely on the client to send it out, they can just open all the letters themselves, fill them in with whatever information they want, and send it back to me. Or if I let the third party send it back to the client instead of sending it back to the auditor, then the client can intercept it and they can change the information. And that is essentially what happened. The whole story is here, but what happened was they received several confirmation responses that basically weren't coming directly from the banks. And essentially, they were coming from management. Basically, management came up to the audit team and they said, hey, we received these confirmations back from some of our contacts at the banks. Here you go. And the confirmations management received back, just so happened to contain much, much higher balances than the confirmations the auditors received back directly from the banks. So normally if this happened, right, any auditor worth their paycheck, right, should investigate that difference. They should investigate the difference between what the bank said when they contacted you directly and what the bank is supposedly saying when management hands you this random other confirmation if the two amounts don't line up. But apparently, the PwC India team did not investigate the difference. They just took the confirmation given to them by management and accepted it as the truth, accepted it as fact, and said, okay, we'll take this confirmation and we'll get rid of the one that the banks sent to us directly. That's basically what happened there. It is pretty interesting. If you look it up, I provided you with the links here if you want to read PCAOB findings and the SEC findings. It's a pretty interesting read, quite scandalous. So all this is to say, cash is very important, and the audit of cash is very important, and it can flow through a lot of other accounts, right? So just if cash is wrong, it can signal a lot of other accounts are wrong, and a lot of other accounts are misstated. All right, so this slide is just a basic review of sources and uses of cash. Definitely give it a scan through, make sure there's nothing here that surprises you, but it should basically be reviewed from your intro to financial accounting class.